Nirav is a highly qualified chartered accountant from Gujarat with over 20 years of experience in managing corporate structures and compliance issues in more than 12 jurisdictions. He specializes in international tax and finance and advises on cross-border transactions from both an international and domestic tax and regulatory perspective. Nirav has helped companies establish suitable corporate structures for holding companies, acquisition of businesses, financing, IP optimization, and so on and so forth. He has successfully introduced or conducted VAT trainings for various organizations, including ICAI, Dubai SME, with a total of around 1,600 professionals participating from 550 companies across the 7 Emirates of UAE. Great achievement, Nirav bhai. Nirav is also a full member of the Society of Trust and Estate Planners, popularly and commonly known as STEP. So I would request all of you guys to please put your hands together and join me in welcoming Mr. Nirav Shah. Nirav bhai.
Thank you to the managing committee for allowing me to thought about and structure this event today. Let me tell you a little bit. So I'm sure by now you all have attended numerous sessions on corporate tax. And a lot of people talk about this provision, this thing, that thing. So we wanted to slightly do something different today. We thought that we will talk about 3 main aspects which is going to directly impact you. Even these are the 3 topics that today when a client approaches me that Nirav, please do an impact assessment for us. These are the 3 areas that we focus on. And therefore I want to talk about these 3 areas specifically with all of you. So I'm going to take the first session on the group structure, ownership pattern and all that, and how it's going to impact from a CT point of view. Then we have Akshay, who is going to talk about transfer pricing, and we are not going to talk about what is transfer pricing. We are really going to talk about how you are going to go about doing transfer pricing, what is the documentation required, what methods are applied to which industry, and why we are trying to create an impression amongst all of you that transfer pricing is daunting. It's documentation and you need to have all that. So we are going to run you through that. Thereafter, we have Vipul bhai who is going to take us through the accounting and why accounting is going to be very important. Because at the end of the day, your taxable profit is going to be determined from your financial statements. And therefore your accounting policies that you follow are going to result or give you the result of a taxable profit. So what we have not been doing so far is that we have not been serious about it or we have not been disciplined about it. And now going forward, we need to get more disciplined. And that's the 3 aspects that we are going to talk about. And then of course all 3 along with Jai are available for the panel discussion. So panel discussion, we have kept it complete open-ended. Whatever questions you have in mind, please feel free to ask. Our sessions more or less are going to be interactive as well. So if you feel like that you want to ask something at that point in time, please stop. Don't worry about it. We are all one extended family. But we will not spend a Q&A time after each session because we have an entire 45 minutes of panel discussion just for that. We want to cover so many things and therefore we thought that we will try and do it this way. Our aim today is that you all take away something from these sessions. Take away something that is tangible for you and take away something that you can actually think about spending more time on and implement. Okay? So of course there are 10 odd points, but you all know why UAE has brought in city. It was under international pressure, and yes, we now have a corporate tax law. We now have a lot of regulation under that. We don't have the main regulations, but we have a lot of them, and we keep getting 2-3 every day. So we are not surprised, but this is something that we call as drip feeding. So they keep feeding us every day with something so that we know, okay, something is coming, but the main important aspects are still hiding. So we still keep waiting for that. It is important for UAE to embrace this level of compliance. There is no choice about it. and they were not left with any options, and that's why they had to bring about all this. And again, going forward, when OECD's Pillar 2 and other global minimum tax initiatives are implemented, it is very important to have this base. Otherwise, you will not be able to implement those rules as well. Rates, you all know, is 0% and 9%. 0% up to 375,000 is 0%, and rest is 9%. But if you are a free zone person, qualifying income is 0, and rest all the income is at 9%. Okay, it's one of the lowest rates across Middle East. It's also one of the lowest rates across the world. We only have Hungary, which is at 9%, and there are 2 more countries which is at 5 and 8%. There is nobody else which is below this. It is the most competitive rate that they could have thought about. Okay, I'm going to spend a little bit more time on who needs to register and why, because that is going to lead me into my today's discussion. So corporate tax registration is mandatory for whom? It's mandatory for all the taxable person. I need to stress this point. For VAT, you all are used to that only if I have a turnover above 375, I'll go and register. Till that time, I don't need to register. Here it's contrary. You have a license, you are carrying on a business, you need to register. All taxable persons. Taxable person definition includes 3 people. All companies which have license. So be it offshore, be it onshore, be it free zone. All of this are companies which are incorporated in UAE, and therefore all of them are covered. So everybody needs to register. There is no exception from that. Even though you are an exempt person, like we got a cabinet decision 3 days back for number 37, which had a list of 500 entities, which are all called qualifying public benefit entities. They are all going to be exempt from taxation. So they are not going to be paying any tax, but they all need to register, and they all need to file return. So compliance is mandatory even if you are exempt. Only people spared are government entities which are doing government function. No other entities are spared from compliance, right? So we have registration which is mandatory for all the taxable persons. Even if you have a branch of a foreign company here, you need to register. All of you who are individual and who are carrying on business, if those business are going to be taxed, you all need to register. And there is one more provision which is slightly expanding the scope for them. Anybody who has a foreign entity and those foreign entities are controlled and managed from UAE, then those are also taxable person in UAE. Those are not non-residents. Those are normal taxable person in UAE, and they too need to register and file returns. So we have about 470,000 registration under VAT for those who are paying and complying with VAT laws. We have about 1,000 odd with excise. So, but we do expect that under corporate tax, the number of registration will not be less than 750,000 or 900,000, because all licenses, all entities need to register, right? And last point is very important. The authority at its discretion, based on information available to them, can register you on their own. Okay? So that's the discretionary part. Now, because it is mandatory for you all to register, that's what now the portal is same. The MRI tax portal has a corporate tax login. We have successfully registered few of our clients. We have obtained the tax registration number under the new portal, and we now have the tax registration certificate for corporate tax purposes also for some of our clients. And it's the same portal. They only ask for some more details to get you registered, and everybody needs to register. Now here the timeline that you have is quite long. So you can register from now, from when the portal is available, till the time that you need to file your return. You need to file your return only after 9 months from end of your financial year. So if majority of the people will fall in this 1st January to December, if we say, then January 24 to December 24 is the first taxable year. I need to file my tax return by September of 25. So I have time available to register all the way up to September of 25. Right? Yes, you have time available, but you need to register. That there is no choice. Okay? And like I mentioned, there is no registration threshold. So whether you earn income, you don't earn income, you have losses, or you have supernormal profits, you need to register. It's common. Okay? So, like I said, who are taxable person? Taxable person are legal persons, natural person and foreign entities effectively controlled and managed. Then we have the non-residents who are having either a permanent establishment in form of a branch or an office or the distributor or somebody based here. They are also taxable, and if they earn anything from here, but that's not going to be operative. The last 2 points are not going to be operative immediately. Okay. So the basis of taxation is that for all those who are resident and are taxable people are going to be taxed on a worldwide basis. So any income in that entity that you earn from anywhere in the world is subject to tax here. You need to distinguish between VAT and this. VAT is a transactional tax. It is only applied to consumption that takes place in a country. Corporate tax is a tax on the entity's operations across. Whether you earn an export income, you earn a local income, you earn a income from outside of UAE, everything is taxable as long as you are a taxable person and you don't enjoy any specific exemption or a separate rate. So please, I'm saying taxable in a wider sense. You might be taxed on some of that income at 0%, but that's a tax rate which could change in future, right? But you are taxable and therefore the compliance. Okay, so here I'm going to pause now and I'm going to ask you, typical to UAE, people have come here, have set up companies as and when they wanted. On an average, in a businessman's group, there will be at least 3 to 5 licenses, if not more. We have classic cases where there are 20 to 25 licenses and all held individually or held very differently. One is held by 3 people here, other is held by 3 other people, they all operate together. Now is the time for you all to ask a question. Is that really required? Do you need so many licenses? Because every license that you have means additional compliance. That means you need to file a return separately for each of them. Whether you can group it or not, we'll see it in the next segment. But first question here, I want you to pause and think whether you need so many licenses. Historically, there have been cases where we said, okay, I had to do this business, so I set up this one. I had to do this activity, so I set up this one. You can add activities into your license. It is going to cost you the same. But then it is your one entity. It will save you compliance. Have you thought about this? If not, this is the time to think. Because if you don't do anything, yes, you have to register for everything, and yes, you have to file return for everything. That's the first one. Second, your ownership pattern. Is it standardized? Is it common? Is it aligned? Have you thought about it? Have you given thoughts to not only how you own your companies, but how you want to actually do your business going forward? Also linked here is the intricate questions on your succession planning. Have you thought about succession planning and have you put something in place for that? Because moment you have corporate tax, and if you start changing anything going forward, it will have tax implications. For every transfer, you're going to then pay taxes if it is not going to meet conditions. The way we used to do business in UAE for last 45 years, those are no longer the same ways that you can continue doing for next 10 years. You cannot. So again, sit back, think whether your ownership patterns are aligned, whether your license, whether you need so many licenses. Can you add some of those activities into your existing licenses? You will end up paying maybe same cost, but you won't have offices to lease and you won't have other things to do, and all will be within the same legal entity. Right? So this is the first and foremost question that you have today. And it's practical, it's for you. This is the consequence of not doing it. Okay? Now let's turn to tax grouping. Okay, why we are talking about grouping now? Because grouping is linked to your ownership pattern. Right? What does grouping help you with and what it does not? We will discuss that. So that you know whether you have these multiple entities, whether it is worth putting it in one group or not. Okay, tell me this way. How many of you have done VAT grouping? Raise your hand. Lot of you? Right. VAT grouping conditions are very simple. You have more than 50% common control or ownership or this or that, you can still put them in one group. No problem. Condition here to put it in one group is very, very stringent. First of all, you can group only if you have a parent subsidiary structure. If you own individually 5 entities, you cannot put them in one group. That's not possible. Second, your parent subsidiary structure also needs to be at 95% shareholding. It doesn't stop at shareholding. It has to have 95% shareholding, voting rights and profit entitlement. So you might have, a lot of you might have LLCs where you might have side arrangements, side agreements and all of them which gives you entitlement. It will still not qualify for grouping. Moment it does not qualify for grouping means you have that much more compliance to do. Right? So here, when you want to start implementing, these are the questions that one needs to ask yourself. How you want to go about going it? What are you going to do to align yourself first so that you get an optimum result? If you don't align now, you will not get an optimum result. Right? You cannot group a free zone entity with a tax paying entity. You cannot group a foreign entity with a local group. So it is predominantly you can group together parents and subsidiaries which are operating technically in mainland and opting to pay 9% tax. Nothing else. If you want free zone benefit and want to get tax at 0%, you cannot put them in one group. Okay? Now, what happens if you group? If you group, as a group, you need to file only one tax return. You need to then prepare financials to support that. You need to file only one tax return. Okay? Now you file one tax return, that means if you have 5 or 7 entities, you don't need to report them separately. You report them all together. You have to then do a consolidation. You have to maybe, if you exceed the threshold of the cabinet decision of 50 million, you may have to get it audited as per IFRS. So if you get it audited as per IFRS doing consolidation, that means extra cost which you are not incurring today. Okay? So just to give you an example further, if you have 97%, 98% holding but 75, then 75 the C-Co will not be entitled to group. And similarly, if you have a free zone company, even if you hold 100%, again you cannot group them. So what are the benefits of grouping? I'll also take you to the drawbacks. But first let's look at the benefits, right? Ease of reporting, everybody is okay with that? Single return, right? Then cost savings, because you are not reporting at 10 places, you are only doing one. Your efforts are only channelized to that one aspect. So you might have overall savings in terms of compliance that you do, right? Then no transfer pricing within the tax group. So your transactions which are internal within the group entities, they need not be at arm's length, because when you consolidate, you are going to net them off, right? Of course, the transaction with outside the group, it needs to be at arm's length. Transaction with the management, it needs to be at arm's length. That is no choice. Only internal group transaction, because a lot of us are used to selling from another entity, not even maintaining the internal linkage of transferring from one to another entity, because it's all part of the same VAT group. No, I don't need to report, so I'm okay. Then I end up preparing also one common books of accounts, right? Now if it's not in the tax group, you will have to do all this separately. You can't do it the way you have been doing it. Improved cash flows, because you are all looking at it all together at a group level. But one needs to understand the drawbacks. And I am highlighting this very, very clearly. One, conditions itself, you cannot group everything and anything. But there is a cost attached. Moment you add every entity to the group, you are foregoing 34,500 dirham worth of tax. You are paying incremental tax of 34,500. Moment you add every entity into the group. Why? Because group files return as one. It only gets threshold deduction of 375 once. So every entity that you add, the cost is 34,500. You will have 0% rate applied. Not 0%. So the 0% rate only applies to group as a whole. And therefore you end up losing, and you end up paying 34,500 for every entity that you add into the group. Second, you need to make consolidated financials. So every entity that is put together, you need to consolidate. You need to prepare consolidated reporting. If you are not doing that today, then audit of that and all that will be additional cost as well. So please remember this. The liabilities are joint and several. Every entity and every part of that is liable for everything that you are doing together. Okay? Risk sharing, limited flexibility. You cannot opt in and opt out of it every year. There are stringent processes of doing how and when. Yes, when you want to sell one entity out of the group, again you have to make separate balance sheet. You have to bring them all at transfer pricing at arm's length, and then prepare all that books, and then only you can hive them off. What happens to the common losses that was incurred, common profits that was earned, you have to apportion. So it's not going to be as simple as you think it to be. So think twice before getting into a grouping is my humble request. It's a setup which is complex. It's not going to be simple. Once you do it, you can't reverse it for next 5, 7, 10 years. It's not today I do it, tomorrow I want to change it. Okay? It helps you only if you have losses and only if you have higher internal transactions. If you have profits, like I mentioned, you will end up paying more taxes at the group level. So this example, you will end up paying more taxes if you are as a group, because you are going to lose out on that 34,500 as I mentioned, right? If you have losses, yes, without any restrictions, you can set up the losses. That's not a problem. Okay? You don't need to worry about any conditions or anything else. You can set up the losses immediately in the same year, seamlessly. Now I turn on to certain provisions or group relief and other things which we have. So these are two main points that I have made right now. One, you need to relook at your group structure. Think about how many licenses you have, align your ownership pattern, Then evaluate whether your grouping will help you. If it helps you, then only group. Just because it saves certain trouble, don't jump into it. Do a cost benefit analysis and then group it, not otherwise. Okay, now as a group, as a commonly owned entities, there are certain benefits. Even if you don't go into grouping, if you are more than 75% directly or indirectly owned, any internal transactions will be tax neutral. So if you sell any assets internally, it will be tax neutral. If you do any merger or demerger or anything, that will be tax neutral. You have also ability to transfer losses from one entity to another. This is a unique provision under UAE corporate law only. No other corporate law in the world allows one entity to transfer profit or transfer losses to be set off against the profit of another entity. If both the entities are 75% or more commonly owned, you can actually transfer the losses. You can only set off up to 75% of the taxable income of the other entity, but you can actually transfer the losses to another entity to be set off. Of course, there are few conditions attached to all of this, but those are minimal and those can be easily met and complied with. The best part, tax losses under UAE corporate law is allowed to be carried forward indefinitely. You don't have a time limit. Whatever losses that you will incur going forward from that time or from the year, which is the first taxable year, you're allowed to carry it forward indefinitely. The limitation is only when you set it off in the next year. You can only set it off up to 75% of the taxable profit of that year. But otherwise you can carry forward your losses till the time you want. Okay? So again, this is very beneficial provision, time limit, and you can carry it forward indefinitely. And you can set it off as and when you have profits. You cannot set off losses that you have incurred today after the taxes have started becoming applicable. So that is not possible. So that will not be allowed, that will not be available, right? So these are the main points that I wanted to leave you all with. Of course, group relief is, so this we talked about. Reorganization merger will be tax free, and yes, most important is general anti-abuse rules. So anything or any changes that you do, please bear in mind you need to have a commercial rationale. You cannot do it only for tax objective. One point I want to highlight here today is that the GAR, the general anti-abuse rule provision in the UAE law, while it is similar in terms of application and fashion with many other countries, here the fundamental difference is that the onus of proving that you have abused GAR provisions is actually on FTA. It's not on you. So FTA has to challenge that what you did not have commercial rationale. It was done only for tax purpose, and this is the quantum of tax benefit that you enjoyed. Once they establish, then they can disregard the arrangement, they can look through it and they can go out of it. Most other countries put lot of this onus onto the taxpayer and not the tax authority. There's a fundamental difference here from a UAE point of view, that they are trying to be more user friendly as compared to a lot of other jurisdiction that we have. Okay? Fine. So the law is simple. The intent is to keep the compliance also simple, but that simplicity will only help you if you get aligned and you get disciplined. It will not help you otherwise. It will be very complex for you because you are not aligned. You are not disciplined of doing things correctly. So when we compare this law with many other law in other countries, it is simple. But are we ready to embrace that simplicity? Is the question that we need to ask to ourselves. Thank you for your patient hearing.
For Nirav ji, I think the presentation, first presentation was very interesting because I think that covered most of our requirements here. Transfer pricing is surely for very large corporations which are operating in multiple nations. So obviously this first one was more interesting. Coming to the point, now you said that entities. Now there are a lot of individuals who have got their VAT numbers because we were asked to take a TRN because they were having properties which required VAT invoices to be raised. Now, do they end up paying corporate tax? Will they be registered as a CT, as an entity?
So it's not by default. If government comes up with a notification which says that rental is a business activity, then yes.
So it's not yet.
It's not yet clear. However, they've defined business. If you do certain activity on a regular basis with a motive of profit, okay? So, and it's distinguished from an investment.
We are making our...
So, right. So that's why I'm coming to. If you are, it's a one single property which is investment which you rented out, maybe not. If you have 5, 10, 15 properties in which you're actively managing and doing, that will be business. But we are still awaiting.
It's still not clear.
It's still not crystal clear. I can't say yes and no.
So
but this is the way that one would look at.
One more question related to that. So that means anybody who is buying a property in this country which is commercial and more than 375,000 dirhams, will he have to take a TRN number?
So again, if it is individual, look, please understand that if it is one-off, may not be.
But
if it is not one-off and it's for investment, it's not investment in regular business, a pool of properties being put together, yes. If you do it as an entity, you anyway have to do it. That's given.
Entity is different.
Yeah.
As
individual,
individuals.
this is the distinction. But we are awaiting the final rules in that.
So still we are not clear. Okay. Thanks a lot. If anybody else has an answer.
I have a typical scenario where I'm an individual, I'm working for an organization for an X amount of money, and I'm also providing consultancy services to some companies back in India, where I'm drawing some kind of a benefit also from that. So in such a case, should I be registered as the taxpayer?
Yeah, so we'll wait for the same rules, whether that activity will fall in business, but in 99% case, your activity will fall into, because it's a professional service that you are rendering.
Yeah.
You are based here.
Yeah,
the service being
but I'm
rendered from here.
also working for an organization. This is just a side thing.
That's a different thing. That doesn't have a bearing. So
I
corporate tax is not driven by your licenses. It's driven by your source of income. If you have that source of income, you have to pay tax.
So I don't need to declare my salary part. I'll also have to declare.
So for natural person, the taxability is only in respect of the business activity that they carry on from UAE and the profit earned there, not the any other part of it. So salaries, passive income, everything will remain outside the purview of taxation. But that's a freelancing business. So you can, So if you are freelancing rendering service, you need to pay tax on it.
One person is doing on everyday basis Bombay Stock Exchange market trading, whether it will be considered as a business activity?
Yes.
Okay, if it is controlled, okay, and it is point of effective control is based out of UAE, will it be taxable in India or will it be taxable in UAE?
If the control is not in UAE, not from UAE.
No, person is sitting in Dubai.
But control and management is outside.
No, it's a natural person. He himself is doing the trading.
There is no issue. No? Then are you carrying on your business from UAE or not?
So you will be taxable in India also at source,
and you will be taxable
UAE
here
and you
also.
get a credit.
Okay, and if it is in the UAE stock market, okay, that will be considered as a trading activity, natural person, and that will be taxable.
I also invite Nirav Shah to please join the panel and conduct the panel. By the way, I'm not sure if the introduction was there, but Nirav is also a rank holder in the Inter Chartered Accountants and Final Chartered Accountants as well. And last but not least, our visiting speaker, Akshay ji, please join on stage. Sir, आपका भी rank है? हाँ, है.
You give me your views. How do you like it? And you want to add anything more? Please feel free.
Thank you, Nirav bhai. First thing first, Jai Jinendra and Jai Sri Krishna. JITO coming back, this is the second time I'm visiting. I love JITO. Why I love JITO is because your memories, your love and your memory power is so that you'd never forget. Even today I was welcome that you remember me, and that was something overwhelming for me. Thank you JITO for that. I really love coming to JITO, and whenever Nirav Bhai says to me, it's like an order for me. So he said, Jai, you have to come, and I'm here. So that's the love you bring to the table.
So with that, if you can circulate the mics around, please start asking questions. Please feel free. This is your session. You have all the rights to ask whatever question you need. We have done our talking, now you do your talking.
As you said that we got to be ready for our taxes. Now, my books already have some losses in this year. So, and obviously I've been maintaining my books for last 20 years. And that loss will continue in the coming year because I still have losses continuing. So, am I allowed to continue the same losses in the books, or my books start fresh? That's the most important question, because as per the company laws number 2015, they asked all of us to maintain our books of accounts, and they said we got to maintain our books of accounts for last 5 years. And now if just today you mentioned that we got to start fresh, that looks to be completely, out of books. Because how can it be that I have been on the planet for 20 years and you tell me that I'm born again? So that's something which is very vague from, if FTA and corporate tax has done that, I think this is absolutely unjustified.
That's, Rakeshji, that is only the accounting aspect of it. Your past losses you cannot set off going forward against your taxable income. So whatever losses you have up to 2023, for example, if your accounting year is Jan to December, so first year will be Jan to December 24 for tax. So up to 2023, whatever accumulated losses, you classify it as your past accumulated losses. So in books it can continue only for tax set off purpose. Only from 24 onwards you will be able to claim whatever you incur in next year.
But till now is not a part of my books.
Because you are not taxed on your profits also. See, it's
Let me clarify one.
Okay.
Other way around. You were never taxed on your profits so far. So whatever losses you incur till date, also you don't get any benefit. Going forward is what you get. You continue your accounting books in the same manner. It will be appearing on your reserves and surplus, and you keep setting it off in your books, but not for tax purposes.
Right. So I have a question for the dais. So on 1st of January 2019, lease finance IFRS 16 was implemented. Now, rent is not classified as a rent expense. It's been split into two parts. One is interest and depreciation. Both are impacted on your 30% of EBITDA. Now, yes, exactly. So my question is for the clarification whether this lease finance that they call, the interest portion is classified in the limit of 30%. Also, the depreciation has to be worked back or not worked back. And the second part of this is, what if this rent is being given by a connected person itself to the company? Now, how do you make that adjustment also?
So on this one, see, primarily, Shreyans, this will come as your right of use asset. So, primarily your right of use asset will get amortized. So you are basically providing it as an amortization. So it's not technically a borrowing that you have done and you are paying interest on it. That's why I view that, if you are actually borrowing money and paying interest on it, that's the intent of it. That, the objective is, in this part of the world, again, what happens, your capital is generally very low. Balance amount is brought in by the shareholders as current account or loan account, and you start charging interest, deflate your profit, pay less tax. Now that's not the case in this particular matter, and this is more as right of use asset which you amortize it.
So, no, technically.
Yes.
So interest definition will not cover this restatement. We'll have to in fact restate, remove the interest and the depreciation and put the rent component and claim it as a deduction. And if rent is paid to a connected party or related party, yes, it has to be a tax.
My question is not that complicated like others have. It's a very, very basic question. So from 1st June, when corporate tax is coming into effect, if somebody's accounting year is from 1st January to December, what happens to the profit earned from 1st June to December 2023?
Not tax.
Not that.
Valuable inputs. I have a question about freehold hotels that we all have, and all the hotels have connecting the owners with a rental pool agreement. So now when the VAT came, we said, okay, we are the owners of the hotel, we are giving you as a rent. So it was a rent agreement. So what they were giving us as a returns was rent and commercial property rent, 375 and above, you pay VAT, it was sorted out. Now when the corporate tax come, the entire hotel calculation comes and they give us, actually it's a dividend. But would I be called as a hotel business runner, so is a business income for me, or is the rent come from me? Because what connects me to hotel is the rent and rental agreement, so it's very vague.
But so we need to look at your documentation first to determine whether you are owner or you are, landlord. Let's differentiate. Then if you are owner, you get dividend. If you are landlord, you get rent. So we need to see your document.
No, we are the landlord. We are the landlord of the property.
Yes.
That's it.
So then you are earning rent.
So that's not a business.
If,
that means.
if rent is classified as lending, leasing of property is classified as business in the cabinet decision, then you will be.
Okay, fine. Thank you.
Thank you so much.
Yeah, sorry, I have another question. If someone forms a new company, say in September 23, and elects accounting year as July to June, so July to June, 1st July to 30th June.
My friend, don't be innovative. You're forming in September 23 when the law is already applicable.
So I'm saying
your first year starts on the day when you form the company.
Yeah, no, I'm not innovative, I'm asking question.
Yeah, so then from that day onwards, your income is taxable.
Okay.
See, back to the substance questions. Now, offshore company are supposed to register for the taxations. They are not allowed to take the office, they are not allowed to take the employees. So how to establish the substance? So they have to close the business for that?
No, pay tax on it. Pay tax 9%.
Then you don't need substance. Even though qualifying income is there.
No, but it won't be considered. Sorry.
So see, before you earn qualifying income, first you have to be qualified free zone person.
So all offshore
entities for which you need adequate substance. Now, if you are only doing holding company business, you don't need people premises. So you need to be.
No, many offshore companies are used for the trading purpose.
Then yes, you need
they are
substance.
taxable, basically.
Yeah.
Nirav bhai, so Dubai mein there are some free zones which are non-boundary and they are selling the product within that free zone and outside area as well. So practically the entire income is taxable. There is no distinguish. Like I cannot differentiate between कि ये within free zone sale हुआ है or this is like outside the free zone. So is it taxable the entire income? Correct. Okay. The second question. There is a.
So let me hold you there. We don't have decision on what is qualifying income. But given what you are saying, if it is only sold locally,
Yeah, it's a locally sold.
then it may not qualify even in that qualifying income.
Okay. So within a free zone, part sales goes to export and part comes to UAE. So is it like only the part sales is revenue is taxable or the entire revenue is taxable?
So earlier we had a concept of free zone, being available for 0%. Now we have moved away from that. In the law it says that free zone person can have qualifying income, therefore it can also have non-qualifying income. So you can have part income which is taxable at 0, part which is taxable at 9. But then you will have to maintain two separate books of accounts. You will have to segregate both of them separately. All the transaction of a common expense and allocation will have to be at transparency arm's length. And both will need to have a standalone financial statement to file the return.
So within one trial balance, you can have like a department 1, department 2 kind of a thing, and then prepare two financial statements with two separate P&L and balance sheets.
Hi, good evening, Jai Jindra. I wanted to check for free zone companies again. My company does business from China to India. We only move bills from here. The physical movement of goods is direct. In that case, I'm still unsure if we qualify to become non-taxable or how will this be?
Yeah, so again, If you are based in a free zone which falls within that definition, you
Free
have
zone, but we have an office in Dubai. I have a Sharjah free zone, but I have an office in Dubai.
no, the license under which you are operating
Is free zone.
where you are booking the revenue. Now that free zone entity where you are booking all that, does it have substance? Does it have office? Does it have manpower to prove that that company is carrying out business? If it is proving substance, it can qualify as a free zone entity, and then your international business, which is third port shipment, what you're talking of,
third port shipment.
then it can apply for that 0% tax
0%.
rate. But you have to prove substance, that's very important. Now you have a license in free zone, but you operate from mainland, which means I'm assuming you don't have an office in free zone. You don't have employees in free zone.
Flexi office is the...
So then you won't qualify substance in that company.
So in that free zone only we need to have an office. सर देखिए सिंपल सा बताता हूँ, विपुल साहब ने कवर भी बहुत अच्छे से किया था. क्वालिफाइंग फ्री जोन एंटिटी बनना पड़ेगा. यू आर अ फ्री जोन एंटिटी, आपको बनना पड़ेगा क्वालिफाइंग फ्री जोन एंटिटी. क्वालिफाइंग फ्री जोन एंटिटी बनने के लिए आपको दिखाना पड़ेगा यू आर प्रिस्ट. व्हाट इज प्रिस्ट? मैंने एक शॉर्ट फॉर्म दिया है प्रिस्ट, आपको बताता हूँ. क्वालिफाइंग फ्री जोन एंटिटी बनने के लिए यू आर अ फ्री जोन एंटिटी, बट टू बिकम अ क्वालिफाइंग फ्री जोन एंटिटी यू हैव टू सेटिस्फाई दैट यू आर अ प्रिस्ट. व्हाट इज प्रिस्ट? PR stands for price. You have to make sure, और you have to बताना पड़ेगा the parties with whom you are dealing. आपने चाइना से जो इंडिया सामान सप्लाई किया है, this is not getting supplied to a related party. If it is to a related party, you have to justify that it's an arm length price. पहला कंडीशन हो गया प्रेस्ट का PR प्राइस. I का मतलब क्या होता है? I का मतलब होता है you have to have a qualifying income. ठीक है. अभी प्रॉब्लम ये है, हम जितने जन यहाँ बैठे हैं हमको किसी को नहीं मालूम व्हाट इज क्वालिफाइंग इनकम. इसका डेफिनेशन अभी भी पेंडिंग है. तो चलिए अभी हम बात करते हैं कि आप उस पर क्वालिफाई कर जाएंगे. मान लेते हैं प्राइस आपने इंश्योर कर दिया, इनकम इंश्योर कर दिया. ई का मतलब होता है इलेक्ट. इलेक्ट का मतलब यू हैव टू इलेक्ट आई वांट टू बिकम अ क्वालिफाइंग फ्री जोन एंटिटी. आप बन जाएंगे, आप इलेक्ट खुद करेंगे. भैया आपको चाहिए 0%, तो आप बोलोगे यस आई इलेक्ट फॉर इट. दैट इज ई फॉर यू. नाउ प्रॉब्लम आपकी जो बार बार विपुल जी बोल रहे हैं वो है एस है. एस का मतलब होता है सब्सटेंस. आप सब्सटेंस कहां से लाएंगे? सब्सटेंस का मतलब होता है आपके पास एसेट्स होने चाहिए. आपने जब बोला कि चाइना से इंडिया यू आर मूविंग द गुड्स, यू आर नॉट हैविंग एनी एसेट्स हियर, यू आर सिटिंग आउट ऑफ फ्लेक्सी डेस्क. इंप्लॉइज के मामले में भी आप फेल हो रहे हैं. यू डोंट हैव एनी इंप्लॉइज हियर बिकॉज इंप्लॉइज सारा का सारा बाहर से काम कर रहा है. सिर्फ कंपनी है जिसको मैं बोल सकता हूँ पोस्ट बॉक्स कंपनी है. एक पोस्ट बॉक्स के अलावा उस कंपनी का कुछ भी नहीं है. वो फ्लेक्सी डेस्क में आप जाते भी नहीं है. ट्रस्ट मी, आप जाते भी नहीं है. तो सब्सटेंस आप फेल करेंगे. तो इसका मतलब है कि क्वालिफाइंग फ्री जोन इनकम भी आप सेटिस्फाई कर देते जब पब्लिश होगी, यू विल फेल ऑन द कंडीशन ऑफ सब्सटेंस. और सब्सटेंस फेल होते ही यू विल नॉट बिकम अ क्वालिफाइंग फ्री जोन एंटिटी. आप उस डेफिनेशन से बाहर आ जाते हैं. और उसके बाद क्या होगा? 375 तक 0%, उसके ऊपर 9%.
All our questions.